3 lenders that'll lend you up to 10K with no credit check.
She took out a $500 payday loan. 145% interest rate!
Payday loans are one of the most predatory ways to take advantage of people who are struggling to make ends meet. And in today's video, I'm going to be going over the unknown consequences of payday loans, how to avoid these loans at all costs, and the viable alternatives that you can use. So in beautiful fashion, get your exclusive limited edition cotton candy flavored cream Oreos out and snuggle in, because this is going to be a good one.
If your credit starts with a 4, 5, or 6, I got 3 lenders that'll lend you up to 10K with no credit check. Stay to them because the last one's my favorite. First, we have Credit Ninja. If approved, you may get your money as soon as the same day, and they have a flexible repayment schedule. Next, we have eLoan. With eLoan, you are not required to accept any offers unless you're completely satisfied with the terms.
I feel like this is the introduction to these crazy payday loans that people get. You know, these apps are designed to feel easy, harmless, like you can just grab the money and move on. But notice how they never emphasize the interest or what happens if you can't pay it back. This isn't a loan, guys. This is basically a subscription to being broke. It's a trap with just better marketing. If you're in a spot where you need money fast, I completely get it. Most people taking these don't feel like they have a choice, but this is one of the worst options you can take. And there are better alternatives that won't keep you stuck like this. Now, this next TikTok, I couldn't even wrap my head around how much interest is actually accruing on this loan. Take a look at this.
She took out a $500 payday loan at 573% interest rate debt.
That's one of our cash advances.
No, this is a payday loan. This is not a cash advance.
Or payday loan.
No, there's a huge difference.
This is what happens when people don't educate themselves on how loans work. This is like a zero strats and intelligence type of play right here, guys. Just think about it. Most people don't learn about interest rates, loan terms, nothing like that was taught in school, at least for me. But people aren't thinking about the crazy interest or what happens in the future, the next week, the next month. They just want to survive through the day. And that's what makes these loans so dangerous. This is like ordering food when you're starving, but the total is your whole entire paycheck plus tax. And this combination of people being uneducated and desperate is exactly what these companies profit off of. Don't let them take advantage of you. And later in the video, we're going to talk about viable alternatives to this so you don't get stuck.
Why does this have 145% interest rate? What is this? What is this loan?
Check and go loan.
It's a payday loan.
Yeah.
That's been refinanced 3 times.
Well, I don't know the
one
fucking
was
worth.
for-
I'm going to say it's $1,925.44 because who knows? You just keep refilling every time for fucking what? For
We
what?
originally got it. It was to help us buy groceries. And then the next time,
He just casually drops refinance 3 times, like that's normal, but that is kind of funny, but also exactly how this gets out of control. And when they break it down later, you see how it actually starts. It's almost never something reckless. It's groceries, a car repair, something breaks, and you just need to get through the week. And that's the part people miss. This usually doesn't start as a bad decision, guys. Nobody just goes and gets a payday loan because they want to. It starts as a necessary one. But once you solve that first problem with a payday loan, it normalizes it. Now, the next time something happens, instead of looking for a different option, you go back to what worked before. Then it turns into refinancing, then doing it again, and eventually you're not solving problems anymore. You're just trying to keep up. Now, a much better option in situations like this is a small dollar loan from a local credit union. These are designed for emergencies too, but they're capped, usually at around maybe like 28-30% APR or less, compared to payday loans that can go over 300%. So instead of the balance exploding like this, it actually stays manageable and you can get out of it. Now, if your credit score is like 450s, you might still get approved at a credit union, but they're actually checking if you can afford it. These payday lenders, though, they don't check because they make more money when you can't afford it. They are banking on you missing that payment. So this is the same problem, but with 2 completely different outcomes depending on the tool that you use. But when I tell you these payday loans are everywhere, I mean everywhere, guys. Take a look at this ad that I found that honestly just made my day. Nah, this is how they really get people. Why does this look like a Gucci ad for debt, guys? Why she posed like this is a fragrance commercial? Talking about some de financial mistakes. They got their gold background, money flying everywhere. You'd think you're about to get rich, like you're gonna win the lottery. Nah, oh, $130,000. Fast cash when you need it most, and fast stress right after. And look how they present it too. Tiny little numbers tucked in the corner, hoping you don't read it. Processing fees, $500 a day, late fee. This is what I mean when I say it's a trap with good marketing. If you can even call this good marketing. They make it look clean, simple, even a little luxurious, guys. This is a pretty nice post if you ask me. But let's get back sort of on topic and let's take a look at some of the examples of payday loans and why you should just never consider one.
Never in your life get a payday loan. Look at this thing. Look at the APR. 441%. My buddy got this because she got into some hard times really quick, so she needed quick money. Look at that damn interest rate, 441%. The $4,000 is the interest charge. If she borrowed $1,600, she'll pay $5,500 if she pays it back. Never in your damn life.
Now, I don't know why she needed the $1,600. They didn't really get too specific as to why she actually requested these funds. 441% APR. That's not a loan, guys. That's a penalty. You're going to borrow $1,600 and pay back $5,500? And once again, people are taking these because they need fast cash. They hit hard times, something unexpected happens, and they just need the money now. And these lenders see that, and bro, I swear, they start licking their lips, bro. Because they know you're not thinking long term, you're just trying to get through today. They start frothing at the mouth. Like, that's exactly how people get trapped. You don't just pay this once because most people can't. And this is how a short-term problem turns into a long-term one. Because 441% doesn't even sound real. Now, depending on the situation, a better option could have been maybe like a payment plan or an extension on whatever hard times that she fell through. A lot of landlords, utility companies, and even repair shops will work with you if you communicate it early. So that keeps you from paying 400% or more interest just to buy yourself some time. And this is the payday loop. Quick money now, multiplied stress later. But in this next TikTok, we're going to take a look at some of the viable alternatives to payday loans and how you can completely avoid this if you ever fall under hard times.
Asking to borrow the money from a family or friend. I know that there's the shame, there's the embarrassment, they might say no. However, when I was looking at statistics in my last video, I mentioned that the average payday loan is around $375. Looking into hardship payment plans or budget payment plans for your utilities. And same day loan from a credit union. Now, I'm going to put an asterisk on this because they do a soft credit pull. And one of the reasons why payday loans are allowed to be so predatory and why they work is because they bank on the fact that some people don't have credit or don't have good standing credit.
Now, I don't mean to be beating a dead horse, but once again, it's not random. It's going to be groceries, bills, something breaks, something urgent pops up. And that urgency is exactly what these lenders rely on. But here's what people don't realize. Most payday loan borrowers end up taking out multiple loans a year, often 10 or more. And that's where the trap is, not the first loan, but what happens after it. Now, yes, I do understand asking friends or family for funds is uncomfortable, but realistically, that's still one of the best options if that's available to you. Because even a simple agreement with someone you trust is going to be better than paying 300 to 400% interest. And another real option is a small loan from a credit union. Those are capped at around 28% compared to these payday loans with astronomical interest rates. One option is designed to help you get through it, through the struggle, and the other is designed to keep you coming back. This is how people get stuck in the payday loop. Not because they're reckless, but because they were in a tough spot and picked the wrong tool to solve it. And I do hope that this video goes out to anybody. This video can be seen for anybody who is actually going through this situation and find some comfort in believing that there are better ways to deal with this. There are better ways to get yourself out of that hole. And this is where things start to shift, because once people realize they're stuck in debt, they start looking for a way out. And that's when they come across content like this.
I'm gonna say this with love, but how many times are we gonna stay stuck and feeling sorry for ourselves, staying in the same situations because our mamas is telling us no, our baby daddies ain't helping, and the banks is denying us? Listen, there are lenders out here working with everyday people just like you and me, who go through everyday shit just like you and me. All you have to do is click that link in my bio and get the help that you need today, not tomorrow.
Now, on the surface, this looks helpful. Credit repair, funding, getting approved, these are all things people actually need. But you have to think about who this is really targeting, because most people clicking this are already struggling financially. And now you're offering them programs for $900, even $5,000. That's a big decision for someone who's already in a tough spot. And another thing, credit doesn't get fixed in 90 days for most people, guys. That's just not how things work. So when you see things like approval in 90 days, you have to understand that's just marketing, not a guarantee. And this is where it ties back to everything we have been talking about. It's the same pattern. Someone gets into a stressful financial situation. They need a solution, and they're presented with something that sounds fast and easy. These payday loans do it with quick cash, but these do it with quick credit fixes and funding. Now, this doesn't mean everything here is bad. There is real information in the credit space that can help people, but it can become a problem when expensive solutions are being sold to people who are already struggling. Because whether it's a payday loan or a $1,000 credit program, if you're making decisions from a place of stress, you're way more likely to make the wrong one. And that's how people stay stuck. At the end of the day, guys, none of this starts because people are careless. It starts because something goes wrong and you just need help in that moment. And the problem is the fastest option that they're presented with is usually the most expensive one. Whether it's payday loans or expensive quick fix programs, they are all promised the same thing: relief right now, but they don't always show you what it costs later. So once again, if you ever find yourself in that position, there are better options, guys. Try and talk to whoever you owe and ask for a payment plan or an extension. A lot of places will work with you if you communicate that need early. Look into small loans from credit unions. They're capped at much lower interest rates. And if you can, reach out to family and friends. I do understand it's uncomfortable, but it's still better than paying hundreds of % in interest. But with that all said, guys, that is going to be it for me today. I do appreciate every single one of you watching the video. I love you all, and I will see you in the next one. This next one is going to be a banger.